Hello everyone, and welcome back. Today, we're diving into a topic that might seem a little distant, but has a surprisingly direct impact on our lives here in Canada. How the U.S. Federal Reserve and the U.S. government influence our housing and stock markets. It might sound complex, but let's break it down in a way that makes sense for all of us. Think of the U.S. economy as a giant engine. When that engine is running smoothly and powerfully, it tends to pull other economies along with it, including ours. The U.S. Federal Reserve, often called the Fed, is like the conductor of that engine. Their primary tool is interest rates. When the Fed raises interest rates, it becomes more expensive for businesses and individuals in the U.S. to borrow money. This can slow down their economy, and when their economy slows, it often means less demand for goods and services from countries like Canada. For our stock market, this can translate to a bit of a chill. Canadian companies that export to the U.S. might see their sales dip, which can affect their stock prices. Investors, seeing potential headwinds in the U.S., might also become more cautious about investing in riskier assets, including stocks, anywhere in the world. Now, let's talk about housing. When U.S. interest rates go up, it also makes mortgages more expensive for Americans. This can cool down their housing market. While our markets are distinct, there's a ripple effect. If U.S. investors are finding it harder to get good returns at home, they might look elsewhere. However, if the U.S. economy is slowing significantly due to Fed rate hikes, it can also lead to a general sense of economic uncertainty globally. This uncertainty can make people here in Canada more hesitant to take on large debts, like mortgages, which can influence demand and prices in our own housing market. The U.S. government's actions, through fiscal policy like spending or tax changes, also play a role. Large U.S. government spending programs can stimulate their economy, leading to increased demand for Canadian exports and potentially boosting our stock market. Conversely, austerity measures or trade policies that negatively impact the U.S. can have the opposite effect. It's a bit like a complex dance. When the U.S. sneezes, Canada often catches a cold, but sometimes it can also benefit from a U.S. economic boom. Understanding these connections helps us make more informed decisions about our own financial futures. Thank you so much for joining me today. I hope this has shed some light on these important connections. If you found this helpful, please consider following for more insights.